You're looking at a price you've already seen before. It isn't new. It isn't surprising. It's familiar enough that your eyes don't tense when they land on it. You've seen worse. You've paid worse. This one feels manageable. You pause. Not because you're unsure you want it, but because you want to be careful. You tell yourself you'll check again later. Maybe after dinner, maybe tomorrow morning. There's no rush. That's what waiting is supposed to mean. It's patience. Control. A way to avoid making a bad decision. Then something changes. The number is higher, not dramatically. Not enough to feel like an alarm, just enough that your brain registers a shift. You scroll back up, looking for context. A label appears where it wasn't before. Only one left. High demand. Prices may rise. You don't remember seeing that earlier. You try to reconstruct the moment. You ask yourself whether you missed it the first time. Maybe it was always there. Maybe you just weren't paying attention. Nothing feels broken. Nothing feels wrong enough to stop. But the calm you had a few minutes ago is gone. Waiting didn't protect you. It changed the price. Waiting feels like the reasonable move because we're taught to associate it with restraint, with intelligence, with not being impulsive. In most parts of life, waiting is framed as a virtue. You pause before committing. You gather information. You avoid rushing into decisions you might regret. That instinct doesn't disappear when money is involved. If anything, it gets stronger. Prices fluctuate. Deals come and go. Acting too fast can feel reckless. Waiting feels like you're maintaining leverage. But leverage only exists if time is neutral. In these moments, time doesn't feel like a factor that can work against you. There's no countdown you're consciously responding to. No explicit deadline you agreed to. Nothing that says clearly, if you hesitate, this will cost more. The interface reinforces that feeling. The layout looks stable. The page reloads cleanly. The offer is framed as if it's simply there, waiting alongside you. The language suggests availability, not pressure. It feels like you and the price are coexisting, unchanged. That's why the increase lands softly. It doesn't arrive as a shock. It arrives as confusion. You didn't do anything wrong. You didn't miss a step. You didn't ignore a warning. You just waited. And the cost moved without you. This isn't about a bad deal or a sudden surge in demand. It isn't about luck, timing, or someone else grabbing the last option before you. It's about a rule that treats time itself as a pricing input. In this system, waiting is not neutral. It's measurable. Every pause signals uncertainty. Every revisit signals interest without commitment. The system doesn't read waiting as caution. It reads it as tolerance, as flexibility, as the absence of resistance. The price doesn't rise because supply disappeared. It rises because the system learned that you're still here. Scarcity language appears after the fact, not before it. The warning doesn't explain the change, it just justifies it. By the time you see it, the number has already moved. The interface doesn't argue with you. It doesn't negotiate. It simply updates. What feels like urgency is actually sequencing. The cost is arranged to worsen as time passes, not because time ran out, but because you didn't act. The punishment isn't dramatic. It's incremental. Small enough that backing out feels irrational. You're already close. You've already invested attention. The gap between the old price and the new one feels too narrow to abandon the decision entirely. That's how waiting becomes expensive without ever feeling like a mistake. You've experienced this pattern across different situations, even if you didn't name it at the time. You refresh a listing. You reopen a tab. You return to something you considered earlier. The price isn't what it was. It rarely drops. It either holds steady or nudges upward. The explanation always sounds reasonable. Demand changed, availability shifted, conditions updated, but the direction is consistent enough that it stops feeling random. Waiting almost never improves the outcome. Acting later almost always narrows your options. What's important isn't the specific product or service. It's the structure. Time is treated as a pressure mechanism, not a background variable. The longer you hesitate, the more the system assumes you'll accept a worse deal. You don't see a clock. But the clock is there. It's counting not seconds, but tolerance. And every moment you wait quietly teaches the system that you're willing to pay more than you thought you were. At some point, the pattern stops feeling accidental. You notice that the price rarely improves when you return. It either stays where it is or inches higher, quietly closing the gap between what you were comfortable paying and what you're now expected to accept. Nothing announces the shift. There's no clear moment where waiting becomes a liability. It happens gradually across small interactions that don't feel significant on their own. A revisit here, a refresh there. Each one feels harmless. Each one feels like gathering more information. But the system doesn't interpret those actions as research. It interprets them as persistence. You didn't leave. You didn't reject the offer. You didn't walk away. You stayed close enough to be counted. That proximity matters. It suggests that the price, even if imperfect, is still within reach, that you're still considering it. Hesitation becomes data. The system doesn't need you to agree. It only needs you to remain. And as long as you do, the conditions can worsen slowly, without triggering a clean break. The cost doesn't spike. It drifts, just enough to test your tolerance. By the time you realize what's happening, you're already adapting to the new number. What makes the system effective is that it avoids the sensation of force. There's no loud countdown demanding action. No overt threat that something will be taken away if you don't comply. The pressure is indirect, spread thin across time. The interface stays calm. The language stays neutral. Even the warnings sound informational rather than urgent. Prices may change. High interest. Limited availability. They don't accuse you of waiting. They don't tell you what to do. They simply sit there, framing the change as natural. That framing matters. If the system made its intention obvious, you would resist. You would feel pushed. You might walk away out of principle. Instead, the responsibility is placed back on you. You're left to wonder whether the increase is your fault, whether you waited too long, whether you misjudged the moment. The cost feels self-inflicted. That's why people proceed even when they're uncomfortable. They don't feel tricked. They feel slightly out of sync, as if they missed an invisible window they were never shown. The system never needs to rush you. It only needs to make waiting feel expensive. After enough exposure, the higher price stops feeling temporary. It becomes the new reference point. You stop comparing it to what you saw earlier and start comparing it to what might happen next. Could it go higher? What if availability tightens further? What if this is the lowest it will be now? Those thoughts don't arrive as panic. They arrive as adjustment. The original price fades from relevance. The new one feels like the reality you have to work within. This is where leverage disappears. You're no longer deciding whether the price is fair. You're deciding whether you're willing to lose access entirely. The choice shifts from evaluation to acceptance. And once that shift happens, the system has already won. Waiting no longer feels like an option. It feels like a risk. At that point, action isn't driven by confidence. It's driven by containment. You're trying to prevent the situation from getting worse, not improve it. The decision is no longer about value. It's about damage control. That's how time quietly changes the terms without ever renegotiating them. This isn't a quirk of one platform or one moment. It's a rule that shows up wherever pricing can respond to behavior over time. The details vary, but the structure stays the same. Waiting is framed as freedom, but treated as tolerance. The system doesn't punish everyone equally. It punishes hesitation specifically, not because hesitation is wrong, but because it's measurable. It creates a trail, and that trail becomes justification for worsening conditions. You never see the moment the clock starts. You only feel the cost once it's already moved. By then, the decision feels smaller than it actually is. The increase feels minor compared to the inconvenience of starting over, and so you proceed, not because the offer improved, but because waiting taught the system that you would. The price didn't rise because time ran out. It rose because time passed. And you were still there,